So if you're a new investor, all of your time should be spent on finding great deals. It shouldn't be spent on optimizing your underwriting sheet. That's a terrible use of your time. It should be spent on how do I speak to sellers? How do I find great deals? How do I buy a $600,000 property for 450K? What's going on, everybody? Welcome back to another episode here on the Multifamily Wealth Podcast. In this quick solo episode, I'm going to discuss what separates the investors who scale quickly from those who stay stuck. And it's one simple thing. All right. So I'm always asked this question, right? This is something I get a lot. Like, well, how do I scale faster? How do I grow my business faster? How do I find more deals? How do I, et cetera? I want to grow quickly from the investors that are looking to rapidly grow a buy and hold real estate multifamily portfolio. This is really simple, right? I mean, a lot of people make this out to be much more complicated than it needs to be. But in this episode, I'm going to just drill down to the most core reasoning as to why some folks scale quick and why some folks don't. This business is all about finding great deals. Great deals are defined as deals that you can buy at some meaningful discount to current market value, the value of that property when you close, right? It's buying the $1 million property for $800,000, $850,000, whatever the number is. Where you close, before you do anything, you've got equity. That's number one. It's all about that first and foremost. After that, it's about leveraging other people's money. It's about using other people's capital, whether that's debt or equity. You combine those two things, you rapidly scale a real estate business. That's all it is. So you can spend your time on one of those two things. You can spend your time on finding really great deals, or you can spend your time on finding great partners to invest alongside you, or by using a lot of debt. Now, if you use a lot of debt on deals that are not that great in terms of you're paying market, maybe you're getting a slight discount, but you're significantly levering up, doesn't really help you scale that much faster, other than the fact that you're buying a bunch of mediocre deals with really bad debt. And at some point, that's going to be a much riskier proposition than just finding great deals with, call it market financing or cheaper financing and using equity capital. You just happen to be giving a little bit more up of the upside. But again, to drill this down, it's just you got to find great deals. So if you're a new investor, all of your time should be spent on finding great deals. It shouldn't be spent on optimizing your underwriting sheet. That's a terrible use of your time. It should be spent on how do I speak to sellers? How do I find great deals? How do I buy a $600,000 property for 450K? You're in a more expensive market. How do I buy a $2 million property for $1.7 million? When you find that great deal, especially earlier in your business or your career where maybe you don't have a lot of investors to lean on to help you fund these deals, you probably got to go and source some high LTV debt. This is the equation for the people that scale quickly. They find great deals, they borrow 90%, 500%, whatever the number might be from a private money lender, a bridge lender, a whoever. Maybe they got a great banking relationship. Maybe they're using seller financing, but they're bringing a small amount of their own capital to the table. They bring it into, they bring their small amount of capital to the deal in conjunction with high LTV financing. In 6 months, a year, they refinance all of their money out into a better loan that allows them to cash flow more. They roll it into the next deal. Again, if you can't source that great financing, or you just don't have the ability to find great deals, or maybe your network is very robust and you can access a lot of capital, maybe you buy, again, you still want to buy good deals. Maybe you're not getting home run deals, but you're buying solid deals. And then you go and raise the capital from your investors, right? You buy the $2 million deal for 1.85, 1.8, right? Enough to get people excited to buy it. But you go and get a regular loan from a bank, 70%. You got to go bring 400 grand, 500 grand, whatever it is to close it. And you go out there to your network, you bring 100, you raise the other 400, you come up with some profit split. This is not for this episode. You go operate it, you compensate everybody, everybody's happy. You keep doing that. You keep raising capital to buy deals. In that scenario, you're giving up more of your upside, right? You probably have to share some profit split with those investors. But again, that allows you to scale and to grow a portfolio a little bit more rapidly. But it's really that simple. Like once you define it as that's what I need to do, then it becomes much more clear in terms of where you need to spend your time. So if you're early in the business and you don't have a robust network of people with dough, you just got to go find great deals. And that's just frankly a sheer volume, violent approach. It's just a ton of conversations, a ton of rejection. It's a lot of patience. It's a lot of no's. And eventually you start finding some good deals. And then you start to grow the snowball in your business. And then once you have a portfolio and you've got some credibility and you go out there and raise money, Once you pair those two things together, that's when you're pouring a ton of gasoline on your fire and where you actually really start to meaningfully scale. Once you pair finding great deals with access to capital, that's when you start acquiring a significant amount of units each year, far in excess of what you could do yourself. But again, that's really it. I'm recording this podcast episode so I can share this link with everybody who messages me and asks me, how do you grow quickly? How do you scale quickly, etc. And if you want to learn how to find great deals, there's all kinds of other episodes that I've recorded over the last 20, 30, 40 episodes. I'm always talking about how to grow your deal pipeline, direct to seller, etc. Go listen to some of those other ones to help you learn more about that. And the same thing on the raising capital side. If you guys got some value out of this, please consider leaving the podcast a rating and review. Helps the show get noticed by more folks. And trying to grow the podcast this year, get to those 300 reviews, which is going to be a nice milestone for us. And again, if you've ever learned anything, it takes 30 seconds to leave one. So would greatly appreciate it if you do. But I'll catch you guys on the next episode.